What's up? What's up, folks? It looks like we are getting our live set up. I believe we've already started broadcasting, but we want to make sure that that is what is going down. So let me double check real quick to make sure that we are broadcasting live as we speak, because that will be important. Otherwise, we will be defeating the purpose. All right, folks. I hope everybody's doing well today. Looks like we are on. It looks like we are live. So listen, folks. Hope everybody's doing well today. I am pumped up and excited to be here with you on this Easter Sunday. Just got some great news today, um, and so I'm always excited and encouraged when people that you love, honor, respect, um, trust you enough to be involved in anything that we're doing in terms of projects and stuff like that. And this young man and I have been doing stuff together for so long, and he started learning with me in the academy last year. Had some challenges, and just hit me back up today, and he had major challenges, not sort of the excuse type challenges, but major challenges. Hit me back up today, has resolved some of those, and really wants to get back started with his education. So that always gets me excited and fired up to be able to share with my friends, family, and loved ones what it is that we're doing with this platform. So today, there's going to be a lot of stuff, by the way. We got a lot of stuff coming out, a lot of information that's going to be coming your way. Like I said before, there's so many people who are doing such a great job of entertaining us during quarantine, providing stuff to mentally get away. Not everybody is going to deal with quarantine the same way. I know there's a lot of things out there, like, if you don't come out with a new skill and you don't come out, with a new business or something, was it really that you had lack of time, or was it really that you weren't disciplined? It's a true statement, but also at the same time, not everybody's in the same place. And if you get that, and it's one of the hardest lessons to learn, like especially like someone coming from the conscious community type of idea, right? Anytime you get conscious or cognizant of something that you didn't know before, all of a sudden you get all in on it and you want to share it, and you forget the point in time that you were at where you didn't want to hear those types of ideas, because all it does is make sense to you now. And so oftentimes that's when people get hypercritical and hyper judgmental and hyper dogmatic, is because they forget that not everybody is starting from the same point. And just like you, there was one point where you didn't know the information, or you weren't conscious of what was going on. And just like you, there's other people in that same state. So what I'm excited about is the idea of giving this type of information and making it available, right? And giving it away for free here on Facebook, as it says, free bands, right? Giving this information free so that you can come back to it and you can look at it and you can take this information. So normally when I get on here, I say I'm only going to go a few minutes. This will probably be a little longer. This one will probably be a little longer because we're actually going to cover a lot of information on Forex. Not stuff that is proprietary to our academy, because I don't think that would be fair to them or the members of our academy. And also, I don't consider myself a trading expert. Okay. What I do feel like is that I have gotten a really good grasp of the fundamentals, and I understand the fundamentals enough where I could talk about it confidently without being a charlatan. Does that make sense? And so what I want to do is share some of those entry level fundamentals with you. You guys can come back to this, you can reference it, you can grab this information, you can take notes now if you want. But what I wanted to do is provide sort of some of that entry level stuff for you, so that if you decide at some point that Forex is something that you want to take on, you have this as a reference point, then to also model with the education that you would be getting from whatever source you choose to get that education from. Flat out, our academy is the best. It's the best academy to get a Forex education, uh, to get information on high frequency Forex, to get information on binary options. And we have a new academy that's just about to drop. I'm talking about, price, and return on investment, what you're getting and what's included. Uh, from what I have seen in the other options that are available in the Forex space, it's really not even close. And most of them are extraordinarily expensive. And the reason is because Forex has been the best kept secret. This is how people can create huge amounts of wealth, staggering amounts of wealth compared to the amount of money and capital that they need in order to create it. And so it's sort of been a best kept secret, which means that when it's one of those types of things, usually the cost of entry or the barrier of entry prevents the mainstream America from being able to participate, right? And so if they want to participate, they normally had to pony up $15,000, $20,000, for a course, 4 or 5 grand, for a couple videos, things like that. These are the types of courses that I'm seeing that are out there, and our academy is not that. Let's just put it that way. Our academy, thanks to the foresight and the vision of Christopher Terry and Isis De La Torre, is that it's allowing the concept, the educational aspect of Forex to actually come to Main Street America so that more households can get what they're missing, which is financial literacy. I was talking to my friend today that's coming back on board with us, and one of the things that we were talking about and sharing was simply that, we all know the value of education. Okay. It's been drilled into us since we were little. The way you move from poverty to middle class to wealth is primarily due to hard work, but also education. So we were taught to become literate and read. We're taught to do well in school so that we can get into a good school. We're taught that once we get into that good school, we can do well there. And that usually translates us to finding some kind of good job, which will allow us to economically advance ourselves beyond where our family historically has been, right? We know that that's sort of the concept of education. And one of the things that's really interesting about it, though, is that when we have an honest conversation, um, what we find is this, right? Is that it is true. But what normally happens? Most people get an education, and let's say I get an education in the field of IT. 4 or 5 years from now, what I learned, the coding languages, whatever, could be completely irrelevant 4 or 5 years from now. If I got an engineering degree, it doesn't necessarily mean that I'm going to spend my working career as an engineer. If I went for 2 years of college and then dropped out, I may work in multiple different fields. I may work in security. I may work in healthcare in some way, shape, or form. I may later in life become a truck driver and do driving. I may work in an office environment and I have to learn the skill set of that. I may go to school for law, but never actually work in law, right? Like there's all kinds of different things. So throughout the course of our life, we are going to have our hands on and learning different skill sets based on the vertical of whatever segment of economy that we're in that we need to operate successfully in that vertical, right? And so we learn the skill set because as we learn, the last 4 letters of that word are EARN, which allows us to earn income based on that skill within that vertical, if that makes sense. Within that segment of the economy, I can take that skill set and I can go learn. And for most of us, we're going to have several different verticals or maybe several different jobs within the same field, but they're going to require different skill sets or a compounding of knowledge upon each skill set. Either way, it's going to be slightly different. What I was talking to him about and what he found, fascinating was if that's the case, if we know that all of us, that education is important, but all of us are going to have our hands in these different fields on these different jobs, and we're going to be doing these different career fields throughout our life. Why is it that we have zero education on the one constant in our life? The one constant outside of our health, right? The one constant that we're going to have is every single day we're going to have some relationship with money, right? We're going to have some relationship with money every single day. We're going to spend it, we're going to invest it, we're going to save it, we're going to earn it, whatever it may be. There is some form of relationship with money every single day. And it's the one skill set that is not going to become obsolete, right? It's not going to change, right? It's the one skill set that will be a constant skill set, and it's the one skill set that we have no education on. I want y'all to think about that. Do you feel like that's intentional? If you feel like that's intentional, you should leave a comment, because I feel like that's an intentional act, right? In order to make sure that skilled labor remains skilled labor and that they don't have the ability to economically advance out of skilled labor in mass, there's a concentrated, intentional effort to make sure that the masses of people aren't trained on how money operates. Now, I believe that. You don't have to believe that, but I do. Because if it wasn't that way, I think that there would be something that would fix it. Okay. And so if we believe even in the notion of that a little bit, then we understand the importance of financial literacy, the importance of understanding that where you are right now financially is the sum total of your financial knowledge, which for the most part was probably passed down to you from your parents. All right. And if you're not where you want to be, then it's going to take something different, right? In other words, what does that mean? The same level of thinking that got you into a situation is not the same level of thinking that will get you out of it. Does that make sense? So here we are, a lot of us right now had a forced reboot because of something that was out of our control, with the economy, with the virus, with maybe poor preparation from the government in terms of being accountable to dealing with the virus. I don't know what your thoughts are on that, and I don't really care. That's not the purpose of what I'm talking about. But I'm just saying that here we are right now, and a lot of people are hurting. A lot of people are hurting. And part of that, if we're being honest, and I have to take the same honest assessments, right, is that we are the sum total of our financial literacy. Because those who are financially literate right now, not only are they not hurting, but they are participating in a major way in the wealth transfer, right? In a major way, they are accumulating distressed assets, adding them into their income producing portfolios at discounted rates. And the rest of us are hoping and praying for a stimulus check. That's literally where most of Americans are, okay? And I can say that with confidence because I know that the Federal Reserve did a study and said that 76% of Americans have less than $1,000 in their account. So if you are one of the few people who's doing well right now, if you're an essential worker, unfortunately, who's risking their lives right now on a daily basis, we thank you for that. But at least you've had a steady income through this time period. We get that, right? But what's the trade-off, right? What's the trade-off? But anyway, folks, I went on a little bit of a tangent, a little bit of a rant there. I'm just about to share the information I'm going to share with you because I'm passionate about helping. I'm passionate about giving you a base level of information and then connecting you to the people that are the experts. See, my ego is not, it's healthy. I have a good one, right? But it's not so large that I need to be the focal point of your attention. What I am confident enough to do is stick my head above the crowd, risk a few tomatoes, have some people tell me your videos are whack, in the hopes that there are a few people that will get the message and allow me to connect them to the mentor, right? That's that's basically what this is all about, is giving people hope. Because see, Forex was the solution before coronavirus, its solution during coronavirus, and it'll be the solution coming out of coronavirus. And what I mean by solution is simply this: it's going to be the solution for whatever it is that you want to accomplish that needs capital in order to achieve it. And most of us have so many goals and dreams and visions and passions and aspirations of things that we want to accomplish. And most of us have great ideas. I have some family members that have some fantastic ideas with zero capital to pursue them. And not only zero capital, zero credit in order to pursue it. And so those ideas get shelved. Those ideas which could impact the world in a positive way, they're gone. They're missing. They never come to fruition. They never get developed. And what it leads to is a lot of frustration and a lot of disappointment and a lot of settlement and a lot of, I guess this is what life is, and I'm better not try for more. And it's just, that's just not me. I want to be able to share and share and share and play a small part in helping maybe somebody understand that they can change their scenario, that what happened in their past does not have to be their future, that they can develop a cash cow, that they don't have to have wishful thinking, that they can do something based off hype, not based off hype, excuse me, but based off math. In other words, it's not, what we're talking about is not hype. It's mathematical formulas. You can do the math. You can do the compound interest calculator and understand, if you do this, this, and this, it leads to this. And if we can get that, and we can get a realistic understanding and managing our expectations, and we can go ahead and set goals and visions and have stuff on our dream boards like I have right beside me, and I have my group of people that I work with right in front of my face right now, and I have this board right here so I can do trainings. If we can have that stuff, and I have my books and I have my quotes and I have my sayings and I have my aspirations, if we can do that stuff so that we can vibrate on another level, and also have the understanding of sowing seeds and taking time and understanding that Forex is the solution, but it might not make you wealthy today, but you have proper managed expectations of where this is going to go over the next 2 to 4 years. Your whole life can be completely different, folks. 12 months from now, everything can be different. And it seems like a long time, but 12 months is not a long time. Look back 12 months ago. What were you doing? Wouldn't you have wanted to get started then? My greatest mentor in life, he used to tell me, his name is Errol Webley, and he used to tell me all the time that the wealthiest place on earth is the cemetery. The wealthiest place on earth is the cemetery, because it's in the cemetery where so many people's hopes, dreams, aspirations, ideas, things that they were God gifted with the ability to accomplish, but they never pursued. They got sidetracked. They never went to execute it. They never stepped out on faith. All of those things are buried there. All those things that could improve humanity are buried with them because they never chased the dream. And so I just wanted to make sure that when I go into that ground, that I'm all used up, that I gave everything I could to my family, to my community, in order to make this place better. And so anyway, so that's part of my passion of what I want to share. So what are we going to talk about today? All right, we are going to talk a little bit about how to sort of get the basics done in Forex. All right. I think you understand that I believe Forex to be exciting, and I believe Forex to be the answer. Okay, so and I don't come to that conclusion lightly, right, folks? I'm spent years serving our communities. So what I want you to do here is I got this here for you, and what I want to do is move it into play. Is because I don't want to use my share screen right now. I want to go ahead and because I want to be able to see and talk to you guys. You want to go to tradingview.com. Okay. This is stuff. This is why I said you can write this down or save it for later. It's called tradingview.com. And when you go there, you're going to click on a section that says markets and then minor. And then you'll see a whole list of what's called currency pairs. Okay. EUR, GBP, GBP, JPY, etc. And what you're going to do is you can do two things. One, you can either click on that currency pair, or you can go up and on another section, you'll see something that says watch list and add symbol. And in that place that says add symbol, you could just type that symbol in and hit enter. And what it'll do is it'll take you to a chart for that particular currency pair. And then you're going to want to click on full featured chart. Okay. Full featured chart, because that's going to allow you to adjust the chart so that it doesn't look like this. And I'm going to go ahead and draw some stuff behind me on this board so that you guys can see. And hopefully this stuff will give you some value. And yes, I am sitting. So right now, when you get there and you see it, it's going to look like this. Something along these lines, like an EKG machine. Okay, that is the actual price of that currency pair that's moving up and down. Okay, that's the price of the currency pair moving up and down. Okay, you'll also notice on the chart that at the top, it'll either be something that'll say either 1, 5, 15, 30, 1 hour, 4 hour, day, they'll say D. And what that means is that that right there is what time frame this movement is happening on. And what we want to be able to do is we want to be able to convert the chart to something called candlesticks. And so candlesticks look something like this. Okay, that is a candlestick. And what that does, or what that means is, let's move that back, sorry. On our upper time frame there, the 1, 5, 15, 30, etc. Let me move it down and make it bigger so you can see the, so if we had it on, let's say the 30 minutes, right? What that simply means is that this candlestick represents 30 minutes of time in the market for that particular currency pair. And so this candlestick could close as green or red, or depending on what colors you set them at, but most people use those, right? Green would be meaning that price had moved up from the start of the candlestick to the close of that 30 minutes. So price is moving in a bullish direction. We'll talk about that in a second. Red would mean that price is moving in a bearish direction. That means price closed below where that candlestick started, okay? And so within this 30-minute candlestick, price could be doing all of those things that you saw before, but it's happening within this 30-minute time frame, and it just captures it all during that time. So price could move up, it could move down, it could move all the way back up, it could come back down, it could do all that, but ultimately price is either going to close higher or lower than when price started, okay? So before we start talking about the candlesticks, let's go back and talk about those things called the currency pairs. So we talked about, let's say, EUR, GBP, okay? So what that basically means in Forex is that we're talking about the euro versus the gold British pound, okay? Or let's use another example. We could have the Australian dollar versus the New Zealand dollar, AUD and ZD, something like that, okay? And basically what you're looking at is that it's a very interesting prospect. So when you're looking at these currency pairs and understanding how do they move up and down, what's happening is this first pair is what we'll call the dominant pair in the currency pair. Okay, if the terminology is specifically different, forgive me, but I'm just giving you guys the basic ideas, like the dominant pair. And so what happens is if the indicators of this pair are strong or stronger than the indicators of this pair. So what does that mean? The economic data, the unemployment rate, the what's moving on in terms of business and stuff within the economy, all this types of stuff. If this is stronger, if the news is stronger and people are more bullish, are more excited, are more invested in the euro than the pound, what will happen is on that chart, it will cause the price to go up. It will cause Euro GBP to move in a bullish movement. Okay? Now, if it so happens that all of a sudden the gold British pound or the second currency pair, it doesn't matter which the two currency pairs are, if the second pair is all of a sudden stronger, right, it will cause price to go down. Okay, so what you have is you have two countries battling each other. Two countries battling each other in terms of economic information and the strength of their currency. Okay, fair enough? All right, and then what happens is they go on and you're going to go on those charts and you're going to be able to use those charts to help you make some informed decisions. Okay, now before you go on the charts and actually start making some informed decisions and trading, you're going to need a few things. Okay, you're going to need a few things in order to be successful in that regard. So what I'm going to do real quick is I am going to go ahead and I am going to share my screen here in a second so that you can see some of the things that you will need. Okay, so with that being said, let me go ahead here and share this. First thing you guys are going to need to do is you're going to go in and you're going to, hold on one second. Hold on one second, guys. Let me do that again. We did that slightly wrong, excuse me. All right, good. So now you see my screen here, okay? So let's go ahead. And what happens is one of the things you're gonna need to do is go to your app store and whatever, Google Play, App Store, doesn't matter. You're gonna go into your search and you're going to need to get something called MetaTrader 4. All right, MetaTrader 4. You see that right there? It's right here, and you can click on it and that's the one you want. You don't want MetaTrader 5. We're going to use MetaTrader 4. You'll download it. So in this case, I have it. So I'm going to go ahead and open it. And what it'll do is it'll take you to a screen that looks something like this. Okay. A screen that is something like this. Up here, you'll be able to add currency pairs. You'll add exotics. You can add stocks. You can add whatever types of stuff that you want to look at. So if you were looking at cryptocurrencies, you see the different types of currencies that are there that you can add, and then you would be able to add those pairs. When you add them, they would end up coming all the way back and being a part of this chart right here. Okay. You'll also notice that you can click on the bottom, you can click the button that says charts, and you can see different charts moving. It just so happens that this was on the 15-minute chart. You see that where it says M15 at the top? So this is a 15-minute chart for the gold British pound, the Euro GBP, excuse me, the same currency pair that we were talking about. That was coincidence. All right. So you see there that there's sometimes big movement within that one candle. You see how it moved a lot during that one period of time? That can occasionally happen, okay? So those are usually called impulsive movements, okay? Impulsive movements. So beyond that, you would also see that you could add indicators, okay? And you can also add things like trend lines, stuff like that. You could add all kinds of stuff onto your charts right here from the comfort of your cell phone. Okay, you come over here, this will give you your trading balance, etc. But what you're going to want to do is go down here and go to settings. You see here, and you'll go in, and what you're going to look for is new account, and then log into an existing account. And what you're going to do is you're going to use your broker's name, whatever broker you use. It may be Trader's Way, it may be CoinX, It could be Hugo's Way. It doesn't matter who your broker is. So let me just say this. You'll go ahead and put their name in there for the broker. You'll put your login information, all that type of stuff, and then you'll be connected and you'll have an account which will have a balance, which will allow you to be able to trade these currency pairs. Okay. When you finally decide to trade one, let's go to a crypto account. When you go to a crypto, because crypto's open right now, when you go to an account to trade it, you'll see that these charts are moving. When you hit trade, you'll see something called market execution. That's where most people start. And you'll see right below that is something called a lot size, which is, in this case, it's that black portion that says 0.01. Your lot size is very important. And if we have time, we'll get to that. If not, we'll get to it on another session. Your lot size is very important for those of you who don't want to trade because you're scared about losing a lot of money. Your lot size is the key, along with something called a stop loss. Okay, so there's the information sort of on your MetaTrader 4. When we talk about, let me go ahead and stop the screen share. When we talk about a broker, okay, your broker is a very personal decision. Your broker is who you're going to leverage and link up with in order for you to take your actual cash and actually put that with the broker. And you're going to be able to trade money with the broker using something like MetaTrader 4 as a platform, okay? I'm not going to recommend to you any brokers necessarily. If you have some questions, you can privately hit me up, but we don't recommend brokers because it's a personal decision. And also there's things where people get referrals off of brokers. So when they refer you and you put your money and you spend your money, the broker pays them for you spending money with them. And I'm not interested in that. And so what we are interested in is helping you find a broker that has low spreads and low fees. Okay, low spreads meaning from the point that you enter the trade until you get into profit, it's as small a spread as possible. Okay, in other words, if you're entering a buy, you're expecting price to go up, you only want your movement to have to be a pip or two in order to move into profit before your trade actually becomes profitable. So low spreads and then low fees. What is it going to cost you per trade? okay? Because they're going to charge you something for allowing to leverage to be able to access the foreign exchange market. So you want to have low fees. Again, if you have questions, there's a variety of different brokers out there. Most of us commonly set the leverage with the trader or with the broker to 200 to 1 or 1 to 200, depending on how you look at that. You can, again, ask someone who's knowledgeable. Ask someone who's trading, and get that information from them, and allow them to sort of give you some information about your broker. All right. The cool thing is that if you need more information, you get back to me specifically on that. I can also plug you into, we have a free app called Legacy Worldwide, which we can then walk you through. The app will walk you through certain steps. It will help you with the process. You still have to pick a broker of your own, but it'll help you get sort of these things linked up and connected so that you can begin to start trading in a demo account or a live account. Now, the beautiful thing about a demo account is it's all essentially monopoly money. So for those of you right now who want to learn the skill, but only have maybe the investment to invest into the academy, the education, but you don't have a large capital pool to start investing in the foreign exchange market. First of all, you don't need a large capital pool to start, but second of all, you can start by learning in your demo account until you're comfortable entering a trade, exiting a trade, modifying the trade, putting your stop loss, setting your take profit, or what we call TP. When you can begin to do those things comfortably, then that gives you the basics to be able to comfortably start trading in a live account, still under the tutelage and the mentorship, hopefully, of someone who's knowledgeable about trading to help you get some wins early in the market. But you can start with a demo account, and that's the beauty of that. So let's go back to these candlesticks. So like I said, we have candlesticks in the market, and these candlesticks are going to have different colors, a different color scheme to them. What's going to happen is they're going to be either sort of a green, or you might end up with a candlestick that is red. Okay, red. So green normally means, again, that we're talking about a bullish or an upward trend of the market. The market is moving up. Okay, bullish. Red means bearish. The market is moving down. So when you hear them talk about a bull market or a bear market, a bull market generally means price is moving up. So in the stock market, if you had purchased price at a low price and you were in a bullish uptrend, a bullish market, you would be happy because the value of your stock would be rising versus the price that you purchased it at. If it was a bearish market and you had purchased at a price and now it drops below, you're losing money, you're very unhappy in that scenario. The beauty of Forex is Forex allows us to take advantage of bullish or bearish market. It doesn't matter. So what matters is our analysis that told us whether or not we should enter the trade as a buy or a sell. Okay, so if we enter the trade as a buy, we are hoping that, let's say we entered it here, our entry price, our EP was 140.50. Okay, and let's just say the candlestick when we entered it was a brand new candle, and we're on the 30-minute time frame, right? And so this candle had been in a bullish movement. Okay, so that meant 30 minutes ago when this candle was started, price started here and had moved up to here, that 140.50. And we entered the trade right there. So we're going to start with a new candle. And our new candle starts right there. And let's say that that candle continues up, right? And closes up here. That means that our entry point was 140.50, okay? And it moved up. And we were in a buy. That means what? That we're going to be in blue, which is profit. Anytime you see blue in Forex, that's profit. Okay? Because we correctly ascertained based off of the indicators that we use that price was going to continue to go up. We entered the price here, and let's say price continued to go up, and it actually went up to 150.50. So that would have been a total of 10 pips. So it moved up, okay? It moved up, and therefore we profited, okay? Now, if we had ascertained that price was going to go down, then we would have put a sell. And let's just say, using a very similar scenario, that price had gone up on the previous candlestick. It had gone up and it was a bullish candle. But when it got to a certain point, we realized, hey, that price has really moved pretty far. So we think now that price is going to go down after that. And so what we did was we entered the same price, let's call it the same price, 140.50, except this time we entered a sell. And so price didn't continue going up, it actually went down. And because we said sell, as price moved down, we go into profit. Make sense? Because you correctly ascertained that the market was going to reverse and it was going to go down. So there's a lot of people right now who made a lot of money when a lot of people's 401ks and all that have been disappearing over the last month and a half or so. There's a lot of people who made a lot of money in the Forex market because on the days that they saw that price, momentum of price was moving down, they just put in a sell. And those days that there was a price correction, they put in a buy. So they make money whether the price goes up or down, it doesn't matter. Just so you know how those little candlesticks work, let's say that when the candle opened, when it started down here, and let's say price went down for a little bit, but it started to go back up. And then that one, this was the entry, and then this was the close. So the candle closed right there at that point. Then the next candle opened, price went down a little bit, but it ultimately went up. Okay, so you see this was the next opening point of the candle, and then this was the close of the candle. And so then let's say the next one, it actually goes down. Here was the opening, here was the close. So that's sort of how those candles, when you see them, they sort of look like EKGs, but they're not. It's just showing you the open and the close of each candle, okay? Showing you how the candle's opening and closing and helping you determine whether the candle moved into a sell or into a buy. Very, 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 very helpful. All right. So what is a pip? A pip is when something moves 1 pip in profit. So pip equals money. Okay? Pip equals money. So what happens is this, is that if you have a 0-1 lot size, remember we talked about lot size? 0-1 lot size, and it moves 1 pip in profit, 1 pip then is going to equal 10 cents. Okay, so if it moves 10 pips in profit, is going to equal $1. So if you ever hear people say, how did they turn 1 cent into $1? It's because that trade moved 10 pips in profit. Okay. Same thing here is if you had 2 cents, 1 pip now would equal 20 cents. And if you move 10 pips in profit, it would equal $2. If you had 5 cents, it would be 50 cents. You see that? 10 pips now would equal $5. And so on and so forth. If you had 10 cents, each pip now would be $1, and 10 pips would equal $10. Okay? 25 cents would be what? $2.50, and every 10 pips would equal $25, right? 50 cents, same thing. When you get to $1, right? When you get to $1 lot size, or excuse me, let me change that, 1.00 lot size, every pip is $10. So 10 pips is 100. So when you see these people talking about they made, $100, $200 a day, is because they're leveraging, they're able to multiply that money using the same strategies that the banks use in order to grow their money in the foreign exchange market. And they're able to do that consistently, winning trades, and they can go into profit. And these lot sizes go higher. They can go to 10, 20, 100, etc. And all of that just means more money, okay? But you also have to have a larger account to mitigate the risk as this goes up, okay? As it goes up. So real quick, and I'm about to end this now, pretty much, because I've been talking for a while. I'm ready to go do something. So one of the things you want to understand is your take profit and your stop loss. And we'll finish with this. So your take profit is basically whether the trade is a sell or it's a buy. Whatever it is, you have a level that you believe that the trade is going to go to. Okay? And usually that's based off of, sorry guys, my camera is bugging. That's based off of something called support and also resistance. And so what happens is, in the market, you have your market moving in different directions, right? The market moved up for a little bit, it moved down, it stopped around this area, it stayed in this area for a while. That's called consolidation. It then continued down, it hit this low part, which is called a support line. Every time it touched that price, it rebounded, touched that price, it rebounded, touched that price, then it moved back up, and then it went back to that area of consolidation, it consolidated again. So this would be sort of a minor resistance line. Then it moved all the way back up here to the resistance line. And so basically what the support and resistance are is different areas where price has proven to have trouble breaking through that area, whether it's up or down. And what happens generally is price turns around at that area and moves in the opposite direction. So a lot of times people will enter a trade and expect it to go up to the next resistance level. And that resistance level could be as little as a few pips all the way up to a few hundred pips. It just depends on the time frame that the chart you're looking at, okay? So most of us will look at the larger time frame to get the general trend in which way the market is moving, and we'll come down to the smaller charts to identify the best entry point for us to enter the trade, okay? So as this all is happening, as this is all going, right? So what happens is you might have entered the trade down here and you might expect your TP to be up there. So when that means is as price moves in this direction and it hits what's called your take profit, it's automatically going to knock you out of the trade. And you're going to take whatever profit that you had gotten from that trade and put it back into your brokerage account. Okay? And even if it continues on beyond where you thought your take profit was, if it keeps going, that's okay because you still made profit. What your stop loss does is your stop loss helps you mitigate your loss. Okay? Now there's different philosophies, but most philosophies say that you should never have any more than 3%, some will say 2% of your account at risk at any one time. So what that means is simply this. If you had $100 balance, what is 3% of $100? It's $3, right? So 3% would equal $3. So the most you're willing to risk in terms of losing would be $3. Now, if we're using with a $100 account, we're being fiscally responsible. We're using that 0.01 lot size, remember, that we talked about? And 10 pips equals $1, then 30 pips would equal $3. Which means this, if we were entering a buy right here, and we expected price to go here, we would put our stop loss 30 pips below whatever this entry point was. Okay, which means that worst case scenario, the most we would lose on that trade is $3, but we might have a take profit, which would allow us to gain $12. So you see, that's a great risk to reward ratio, because even if we only hit 60% of our trades, we're winning big in that scenario, right? We're winning big time in that scenario. And so it's okay, even at 50%, it's okay because we're winning. Because we have understood leverage and we understood our stop loss and our risk to reward ratio. Okay? This is why this is really, really, really important. This is how you protect your account. Watch this. What happens if there's a day and you have 2 trades go back to back and you lost 6%? Stop trading. Don't revenge trade. Don't angry trade. Don't, right? Just go ahead and stop trading on that particular day. It's okay, right? It's okay to do that so that you can get out the market, clear your head, come back. Because what happens if tomorrow, the very next trade you hit your $12 take profit, or your $10, or whatever the trade is going to call for, your $50 take profit, whatever it calls for, right? You're still up in the market. And what happens is, this is a psychological game, and we could have been up $2,000 for the year, and we could have a trade that loses $100, and we don't still see ourselves psychologically as up $1,900. We see ourselves down 100 because we just lost on that last trade. No one's going to win every trade. What we're looking to do is mathematically win, where we're winning more than we're losing, and we're growing our account through compound interest over time. Compound interest is the secret. You can't get it other places. The compound interest is the key to creating a cash cow that Randy Webb always talks about. Creating a way for you to do what the banks have been doing to you for the entirety of your life. People have been making money off of you for the entirety of your life. The banking system has been doing it. And you can take control over that by just figuring out how to responsibly and safely grow your account by a mere 2 to 3% a day, 15% a week, 15% per week of account growth. Sometimes, folks, you can get that on 1 or 2 trades. Per week, growing your account. If you had a $100 account, and you did that for 52 consecutive weeks, you would be somewhere around $140,000. Compounded, folks. Now, the first day, what happens? Your friends say, why are you learning Forex, bro? You made $3 today. Not equating that you could have $100 in your bank for an entirety of a year and they're only going to give you 1% interest. So you just tripled what your bank was going to give you for an entire year of having money in your savings account. You just did that in one day. And now the next day, and the next day, and the next day, and the next day, all of a sudden your account is growing and growing. And now all of a sudden you have $115 in your account. And they're still like, bro, why are you coming on these classes? Why are you watching this stupid guy's Zoom presentations? What are you doing? The next day, and the next day, and the next day. And it keeps building, and you're in control of it. There's not some guy at the 401k that works at the company that you don't have any idea who he is, what his trading philosophy is, what his trading record is. You don't know where he went to school. You don't know whether he was a good student, a bad student. You don't know if he calls in sick half the time. You know, that guy right now, that's the guy or gal who's running your 401k right now. And they're just there not to grow your account. They're there to make sure that the company can continue to collect your fees. And that's why your growth rate is so slow, because they're fee driven, not growth driven. And you need to be growth driven because it's your account. And you can learn this skill set, folks. The stuff that I just went through, this is simple stuff. You want to make sure that you're trading on trend. So you want to be able to identify whether the market is moving up or down on the larger time frames, the hour, the 4 hour, the daily chart. Where is price? Did it start here 3 days ago and has continued to go up? Bottom out here and then continued and continued. You would see there that price is on what's called an uptrend. If price was doing the opposite, it would be on a downtrend. And so if we know which way the market is trending, we use that as the foundational analysis for us to look at where to enter the trade and trade on trend. And we can do that without having to spend hours upon hours upon hours upon hours of looking at charts. Initially, you're going to have to invest some time into you, and then you can look at the market Sunday nights and maybe Monday mornings when you wake up, you can get an idea of a couple trade ideas that you can put forth. You can put a stop loss and you can let them run, and you can outperform potentially, let me say that, outperform what you're currently doing, and you can begin to grow wealth, grow capital that you can then take, and you can finally do that real estate investment. You can finally buy, that franchise. You can finally, start, Mama's Famous cupcakes, whatever, right? You can do the stuff that you need to do because your growth in this is the sweat equity of you committing to learn. And then on top of that, while you're learning, if you learn with us, you have the ability to have people who already have all of this figured out and who have already proven that they can win in the market. You can get on a session with them once or twice a week, maybe an hour, where they'll give out some of these trade ideas and walk through why it is that they believe that this is a trade that they should take, and then they enter the trade and they offer you the trade. In other words, they're putting their money where their mouth is. They're entering into a trade idea, trade setup. You can now enter into that same idea, and you can basically just copy, paste, and profit. And you can continue to learn the skill by trading in your demo account and allowing the professionals to make you money, but you are analyzing the trades with them over time. What does that mean? It means that you will be able to see what they see in the market. You will be able to take profitable trades on your own. And then you will be having to make money along the way, so that when it comes time, you've been trading in your demo, you've been making money, now you have confidence, and you can get in this market and you can tear it up, folks. On your time, wherever you are in the world, with this device and some Wi-Fi connection. So that's basically it. I mean, I probably had a few more things I was gonna cover today, but I think that'll be it. I think that'll be it right now, for now. There's so many things, folks. I had no idea about any of this stuff. I really didn't. I mean, I knew it existed, but I had no idea. I didn't know what the Dow was. I mean, I just knew it had stocks, and I didn't know that you could trade it. I didn't know anything about cryptocurrencies and Bitcoin and all of this type of stuff. But I do now. I do now. Because isn't it incumbent upon me to stop, stop having to reboot and reset and start over, and this time it's going to be different, and right? Isn't it like I have to learn about money? And my bet is that most of you guys do too. So why not learn? Why not have fun with, these things are kind of technical because it's me talking to just a screen. I'm not even getting any feedback from you guys. Okay, but normally we're together in a group, and it's a conversation, and it's people putting in their expertise and highlighting stuff and asking questions. And it's sort of that idea of the mastermind alliance, where as a group, we come together and we're looking and we're learning and we're having fun together. It's so much fun. It's so much fun, folks, if you are moving in a direction with a group of people that's positive, where it's a group of people that's supportive, and it's a group of people that wants to see you win. And because right here, the way the Forex market is designed, it is not a dog eat dog scenario. It's not like I don't want to give you this is key. It's not like I don't want to give you the information, because if I give you the information, you become my competition. So a lot of times in traditional entrepreneurship, I can't tell you the recipe, because maybe my food is better, but your customer service is better. And so if you now have the recipe, you now have the food and the customer service, you can put me out of business. I can't create competition. And so it does not allow necessarily in a traditional entrepreneurship relationship a very good apprentice-apprentice relationship all the time. Because most times, unless you're going to go into a completely different field, I can't give you the sauce. Because if you take it, you become my competition. In Forex, it's completely different. I want to give you everything that I know. And then I want to make sure that you get everything that I'm being taught from the people who are even better at it than me. Because the market is so big and so liquid, I couldn't have it all to myself if I wanted to. And that's number one. And number two, you can put the same trade in that I did. Let's say my lot size is $1. Just because at this point my account is bigger, my lot size would be bigger. And so therefore, the return I'm going to get on that trade if it hits is bigger. And you might be trading a 0.01 lot size. But get it, folks, you're in the same exact trade with the same exact analysis, with the same exact compound calculator, which means that if you follow the steps of compounding, you will get to where I am or where other people are. And so therefore, it's just a game of math. I don't care. I want you to win. Big difference. Big difference. See, the secret of network marketing has always been on the network marketing, on the business building side, is that I couldn't make a dime until I helped you make one. And so people always made more money off of their upline than they ever created for their upline, because that's just the way the system is designed. And so it's that vested interest that always made network marketing appealing, because you had people who had already done it, but in order for them to continue to profit, they had to teach me what to do in the proper way so that I could become profitable, because they were only getting a small percentage off of my profit, franchise fee, so to speak, right? And so here, that vested interest is just implied because it comes from support and desire, and there's no competition. There's no one blocking you from winning. We all want to see you win, because every time you win, and that little excitement, it sparks a little excitement in our heart. It sparks a little excitement in our teammates. All we want to do is see you win. All we want to do is see you win, and all we do is create an environment for winners. So, folks, I'm done for today. I have a lot of exciting stuff coming up on my little Facebook page coming up tomorrow. I'm actually going to be, man, I don't know what I did in life sometimes to get so blessed, but I'm actually going to have the opportunity to interview a guy. I think you guys saw the interview with Randy Webb, but I'm actually going to be interviewing Mr. Nafis Khan out of Vancouver, Canada tomorrow. So we're going international tomorrow night. So you'll definitely want to check that. Incredible serial entrepreneur, incredible success story. I really want to dig deep and get into his story, his background, and just sort of give us the uncovered nuggets, right? Like, let's get those deep nuggets out. And then we've got a couple more interviews coming up this week. We got Miss Wanda Webb. That's going to be fantastic, folks. You don't want to miss that. I got Sakina Abdul-Jalil coming on. I got a couple other people in mind. So a lot of free stuff, man. We're just trying to give you guys value, keep you guys motivated, give you guys something else. I mean, we can always entertain ourselves, right? But let's also, in the midst of the entertainment, also add a few moments here or there where we can sharpen our skills and get better during this time when we're kind of forced to sit down. So with that being said, folks, I hope this made sense to you, and we'll talk to you guys soon. You guys have a great day, and enjoy the rest of your Easter. All right? Ain't it great?